everyone a wonderful day, my brother. Wonderful day, wonderful midweek day. So the first thing I wanted to just get into today was I had a yesterday. I wanted to look through. I wanted to look at a question that was raised before we kind of get into the steam of today, because usually, towards the end of the show, maybe we've run through so much we run out. Somebody did ask when we did our specialization section, and he was saying, how does this work with the view that a person should be a jack of all trades? How does this work that a person should have multiple streams and multiple things? So one of the things I like to try and point out to people is the efficiency or the efficiency of earning. And to that question, I'm always it's always something that's always thrown out whenever you talk about specialization and the importance of specialization. Well, the reason why specialization is extremely important is because once you specialize in something, you actually acquire a lot more value for money. When you focus on what you're good at, people tend to, one, look for you, so you spend less money marketing and selling yourself, because that's usually the strain of trying to do business with somebody. You have to convince them. You have to tell them, hey, this is why I'm good. This is why. And then you have to give them a free trial, then hope they call you back, and they make you wait as they evaluate. You see, the reality is when you're the best at something, people spend less time trying to evaluate you. That's the truth. They actually focus on trying to afford you and come straight to you. Your reputation already speaks for itself. In fact, your reputation has already gone ahead of you. So your marketing has already been done for you. It's just whether this person can afford you. That's it. All right. And that is the first point of why being a specialist is extremely important. It reduces your what's it? Your marketing expenditure, and if you're really good at it. And if you focus on being a good specialist, you can specialize in an area and you can still suck. So that's not what I'm trying to talk about. I'm talking about being a specialist and being best in your area. So that's one thing. The second thing also, Vernon, is that when you're a specialist, people tend to offer you a premium. They seem to feel comfortable wanting to pay a premium for you. Okay, so the same 1 hour of work that other people will get, the same 1 hour of work, your other people will get. They really they'll pay maybe half of that. In that same 1 hour, you'll get a lot more if you're a specialist. Why? Because there's almost like a quality guarantee. There's a trust that this person focuses on everything, on that specific thing. And secondly, thirdly, Vernon, let me ask you this simple question. If you have, let's say, a throat infection, or let's say you have a throat infection, it is serious and you're really worried about it, who would you rather see? Would you rather see a general practitioner, or would you rather see a specialist in throats? Okay. Would you rather? I don't know what their name. What's the actual
Someone
term?
who
I think there's a very
specialized, someone who has more
yeah,
experience
ear,
in
throat,
that.
and yeah. Why are you more comfortable with the person who specializes in that area?
Chances are he has more experience on that one who's a general medical practitioner.
Exactly. Just in general, people would want, just people themselves are more comfortable. So because they're more comfortable, guess what? They're willing to pay more. So if you want to reduce on your marketing expenditure, and if you want to increase on your earnings per interaction, then being a specialist pays off more. Now, when you're also a specialist, you benefit from something called the halo effect. And the halo effect simply means, Vernon, when you're very good at something, people think you're very good at everything. So whenever you deliver a very good service in an area and you're a specialist and you do this, somebody will then now introduce another problem they have, and a sentence will start with, "So do you also?" When you start getting a lot of "do you alsos," that's a path to what we call product development. So if it's something in your line of proficiency, then you are able to say, oh, yes, I can actually do that. Let me give you a simple example. Company like Zambia Sugar makes sugar, but they can turn around and say, but then the world is now saying, we need to mix ethanol. Do you also make ethanol from your molasses? And they say, yes, we actually have molasses as a byproduct. So therefore, we can now bring that into the energy supply chain. Okay, that's a do you also. because they're specialists in sugar production and the molasses that they're able to produce on the sideline, it gives them ethanol production capacity, and therefore they can now go branch into a do you also. Do you also is what we call product expansion, where you can expand your range of products based on your proficiency. Okay, so that's another thing that starts to happen. So specialists tend to actually be able to generate higher profitability. They can do yes, they are obviously open to a lot less opportunities because they've kind of zeroed in one specific area. But what happens is that when the opportunities do come to them, they actually do, and the difference is opportunities come to them. They don't have to run after most of them. Specialists tend to get sought after. So because they're doing that, they do it at a higher profitability and they're able to charge a higher price comfortably. And it's less energy exertion, less cost. This is why we're even on a radio station that specializes in business. Okay, obviously it's a growing one, but the point I'm trying to say is that when established, in fact, if you look into the future and you look at the bigger ones in the world, Bloomberg versus the other major media stations, Bloomberg has a stronger brand and profitability because it focuses on markets. Because of Bloomberg's strict focus on markets, those who go and advertise on it know that Bloomberg has cordoned off a specific market. They've already cordoned off a specific group of people who they can target market. So they've really worked on honing in on that target market. So when you specialize, it's extremely important to understand that your premiums can be set. And when you can charge a premium, that means that you are able to make a higher profit margin because it's a perception-based premium and not something you had to start putting in to get that. It is what people feel about you. So when you're able to charge what I call an emotional premium. So Venom, there are two reasons you pay for stuff. Okay, you pay for things because of the features in it, but more importantly, because of the emotions they give you. Okay, so if I can give you an emotion without a feature having to be put into it, that is a profit, right? So if I can give you what I call an emotion, a featureless emotion, meaning that you're just comfortable with me, meaning that you're just comfortable coming to me. That's the specific point I wanted to point out there. So why do we talk about specialization first? Because your path usually comes from giving yourself to one industry or one profession or one specific area, giving yourself there so you can make a name. Because if you can't make a name, you're going to spend your life having to sell to people. Every single time, you have to keep convincing people, and it always becomes exhausting for you. So that's why I was telling people that you want to try and specialize. Now, when I talk about diversifying income in your speciality, it means that whatever skill you have, find multiple ways to make money with that skill, not trying to learn 16 skills. With that specific skill, what are the multiple ways you can make money? Okay, and that is why I gave that example of Jordan Peterson, who was a clinical psychologist. Okay, he practices already. He's a lecturer. He's an author. He does tours. Speaking tours that he does. He's got an online platform to help people with personality and self-authoring. So he's created a tool, he's created a speaking program, he's created books, he's a lecturer, and he does consultations for clients. And that is how he's able to generate an income of $300,000 to $500,000 per month. Okay? Because he has diversified how to use one skill he has mastered very well. Okay? To the point where Jordan Peterson doesn't sell himself. People look for Jordan Peterson. Okay? They look for his services. They look for his work. They come to him. Okay, it's the same thing that even Miles Monroe, when he was around. Miles Monroe was a preacher and a corporate consultant, and he did that because he understood the importance of leadership. Okay, and that's something that you have to understand. That's why, if a lot more, I know that we have something in our culture we call 99 jobs, but the reality is that we can't live by that. Yeah, we can't run by that because a specialist is the pathway to most people's wealth. Becoming very good, becoming top of the line in your speciality is often where wealth is built. So it's just something I want to just put out a bit earlier today so that people could kind of understand where it's coming from without having to stress this argument. Because I know the only problem, Vernon, that we always face is that there's going to be some guy on social media or YouTube or something who is going to say something, and people are then going to say, oh no, but so and so said this and so said that, and he's so cool when he said it. And I'm like, okay, fine, that's your issue. The only point I keep trying to tell people is maybe try and look at the probabilities and realities. And if you want to try and see, even amongst doctors, who's the higher paid amongst doctors? Is it the general doctors? Because doctors seem to be your higher paid in society. Sit amongst doctors and ask them, who are the people who get paid more? Who are the wealthy doctors? Is it the doctors who do general work, or is it the doctors who specialize? And you'll come to realize very quickly it's your specialized doctors who actually make a lot more money than your general practitioners. And that's just general. That's just how most business works. Even in my line in finance, people who specialize in specific asset classes or specialize in specific value propositions, they are sought after because people will say, well, if you want this done, go to that person. You are the go-to that person. You want to be the go-to person or the go-to name, because then you don't have to advertise, convince people, and now have to give them free trials and samples and so forth. So there's a higher profitability in being a specialist. I don't know. What are your thoughts, Vernon, on the whole conversation of specialization versus generalization?
I think it's about really finding what you do. You know, the other day I was having a conversation with a friend. He's into politics governance, very young by the way, you know, and we were actually discussing on how basically the scenario, the environment actually has been for a lot of young people. You are sitting in a place where there is a niche you're trying to grow and build, and then there is something probably started that is contrary or away from what you really want to do and specialize. And so, trying to go for what we were told is going to be paying you well, and trying to do what you love best, something that you can build and do it without even a pay up with, So finding yourself really, I think, is a challenge that a lot of people seem to be encountering every now and then, and growing that niche. I have met people who have been in a particular industry a decade and so, but then they're not really good at it because they're there and accumulatively due to experience, they're getting the hang of it, but they're not really good at it. It's not really their thing. And you find every now and then they change from one career to the other because they feel that is not really their place. They've tried, they have stayed, tried to be consistent and determined anyway, try to read about it and grow, but still it is just not their thing. So it actually ends up to be difficult for them to really build and diversify and create a niche out of it. So I really think a lot of people should have a sense of discovery first. Find where their place is. It's okay to try out that, and then when you find it, settle there, grow it, enrich it so much that actually it burgeons into something that you can diversify now and make money, grow from that. We've heard a lot of powerful and very exemplary stories over time from these guys who are doing well because a place that they're good at, and they grew from there, becoming big. And actually now we know them for who really they are. You're talking about Tiger Woods. The guy can really play golf. We know him for that, and he's really good around that. I mean, there are other sports I'm sure that he plays, but tennis, golf particularly, is something that he's really good at, and he's grown. And today he's one of the people we know in that particular spectrum of sports. So I feel people really how ambiguous about the whole aspect of specialization and generalization. Even in tertiary education, as you start out, you have all of these general courses, and as you are furthering your studies, there's no sense of specialization. Just trying to give that sense to, as you can have these in any case scenario. Okay, you are doing possibly media, you have radio, you have reporting. In any case scenario, advertising is not really your thing. You can actually branch off and get into reporting. In any scenario, things are not okay for you, you don't like that, you can actually be in the spotlight, do presentation and broadcasting. It just trying to give you more avenue just to help find yourself and grow the niche. And of course, specialization cannot really be overemphasized. Find yourself and grow in that particular space. I feel people should really work on the discovery part. I think that is really going to help them good guy.
And Vernon, you're right about this. In as much as the first step, and especially your 20s when you're young, is to find yourself. You really have to find yourself in your 20s. Like find your lane. And your 30s is where you are going to now like build your lane. Okay. So that's why I always say 15 to 35 is to make up your mind. 35 to 55 is to make your money. And 55 onwards is to make your mark. So those are like the three steps you want to really look at in life. And that's why I'm saying that if you're trying to build wealth. Now, I'm saying this because if you sit down where I am in my perspective, when I'm sitting down with clients, going through their books and looking at who has built wealth and who hasn't, I will find specialists are the ones who more often than not are able to generate money with their specialization because they're concentrating their time on something and juicing out a lot of money from it. And then they're able to pour that into assets. Okay. Because they don't have to put as much effort into trying to make money as people. Now they've built names for themselves. And it's true. Find yourself. And here's what I'll say to a lot of people. Your specialization is not necessarily going to be what you like. And I know people don't like this because everything is about how I feel, what I like, everything. People like that. And I was there. Trust me. Everything was about what I liked and everything. And I'm telling you the truth right now. It's not going to be what you like. It's going to be what you're good at. Okay. What you are naturally gifted in and you have taken time to sharpen. And two, that is useful to many people or useful to a growing number of people. Okay. So it has to be two things: proficient, and it has to be a problem in society. So if you tap these two things and you spend time sharpening yourself at it, then no matter how much you don't like something at the beginning, the longer you do it, okay, if you're good at it, keyword people, good at it, and it is useful and needed to society, the longer you tap into these two things, you will build a passion for it. Because the passion, a sustainable passion, comes not from how you feel about something. People are emotionally erratic. It's about how other people need it. And then you connect with people because of that. You're going to build connections with people because of that. Because in that moment where you've delivered a good service, their elation is going to warm your spirit. That is what's going to happen to you. The enrichment of your job actually comes from, and I was speaking to, I've spoken to clients about this and I asked them about their work and their jobs. And one of the things I took notes down while I was speaking to one recently was, she came up with the sentence with the idea that job satisfaction actually comes from delivering customer satisfaction. So when you're racking up a lot of satisfied customers with your work and with what you're delivering, because you're good at it and because they need it and because you're delivering that and they keep getting satisfied more and more and more, you will build satisfaction also in your industry. So that's something that most people need to understand. You will get a lot more satisfaction. What I think a lot of people don't do is they don't interact with the people who use their services. They don't interact with the people who need them. They don't interact with where they are needed and what impact they're having. If you take a look to actually see the impact you're having in somebody's life, in people's lives, that will move your spirit. And then you will start to feel like you have relevance in the work you're doing. And that is where a lot of joy comes from. It actually comes from delivering service to people and seeing them light up, seeing them exit a problem, and seeing them improve in their lives. So just everybody try and take that as a note. That's why you really have to be able to find where are you able to satisfy people's needs. Okay, that's like a purpose of life. Like being able to satisfy. I'm not saying go around people pleasing. There's a difference. Satisfying a legitimate need where somebody was in need and you served them beyond expectation and they are joyful because of that. And if you continuously interact in that space where they are joyful where they are satisfied beyond expectation, where you meet their need beyond expectation and they are satisfied and they're able to express that satisfaction, that is where you get your enrichment from your job from. You understand the importance of what you're doing in society, and then you also know that you're very good at it, so you're confident in yourself because you need that confidence and you need that compliment. Like these two things are going to come together and they're going to mean something to your job. And then you keep doing it with your heart. So if you want to find out what you like and what you're passionate about, you have to spend time somewhere. Okay. It's not just a lucky strike and say, "Oh, I'm in love at first." There's people love at first sight is a story they sold you in movies. Even marriages, people have to work at liking each other. That's the reality. Okay, not this thing. No, you fell in love. You will fall in love with someone at first sight, and you will leave them in 5 years when that spark goes. Okay, so what you want to focus on is being able to build that kind of sustainable feeling with things. Anyway, let's get into quickly into the data points of today before we kind of drift off. Today's data that we looked at. Firstly, we're going to take a look at the financial markets when it comes to forex. The forex market has continued down its 97th day of loss. The loss was a bit slower, but it's still the 97th day of loss. Kwacha was down 0.33%. Rand was the one that also lost a bit of steam. So we are getting a little bit of a downturn in the South African imports, but US imports coming from China, India, those things are still coming in quite a bit more expensive. Dollar is up on the week 1.1% and up on the year 8.25% year to date. On a 97-day winning streak is the dollar, 97-day losing streak is the Kwacha. This is the second longest one that we have on record. Remember that the Rand is also down, is also closer to its 52-week high, which is 124.8336, but it's still at 107. So we have a Rand that is only up 0.54% year to date. So any South African imports really haven't changed in price. Except for in South Africa itself, which is actually starting to see declines in inflation, which are now down to 4.9%. So that's at least a good part. Remember, we get a lot of consumer goods coming in from South Africa. We're still seeing that the bond market is still moving at a relative click of about 0.426% year to date. So we are going to see a bond market that'll probably deliver just above inflation, while it is the other markets, be it your crypto and your commodity markets, that are going to do quite strongly. In fact, going into that area, Vernon, we're seeing that Bitcoin was down 0.46% yesterday. Ethereum was down 1.52%. So as I said, these things are wildly volatile. So this is why I advise people, don't build the majority of your portfolio on Bitcoin, Ethereum, and gold. These are just what we call wealth insurance. They should take up no longer than 5 to 15% of your portfolio. That is where they should be sitting in terms of them collectively as what we call wealth insurance. Now, the main thing is we saw copper was up 0.73%. Oil was down 1.72% in terms of dollars, and gold was down 0.49%. So we are seeing signs of the Chinese recovery starting to come in. But one thing we're really being driven by is, even though Russia is saying that they're going to pull up barrels of oil, they're going to pull barrels of oil off the market, 500,000 barrels to be exact, you're still seeing that the risk of a Federal Reserve rate hike is playing its way into oil. What's driving copper upwards is what's happening in Panama and Peru. These two countries are slow in production. One, because of political interference in the copper mining industry. The Panamanian government is trying to do what Zambia did 10 years ago. All the best to them. They'll learn. These copper companies can whack you if you try anything funny with them. They'll learn, because they've gotten arrogant. They think, First Quantum need us. They don't understand. First Quantum can shift if you're not careful. But yes, Panama is attempting to pull a Zambia. Good luck. Let's see where they end up in 10 years. Other things that we're looking at also in the copper market is Peru has been going through quite a lot of strikes, remember? So what's happening in Peru is actually it's slowing down copper production as well. So Peru and Panama starting to slow down is now creating a lot of supply gaps in the copper market, raising the price up 9,188. We're really trying to get past 9,500 for us to get a good copper price and to try and get our mines up. But I think our mines are also trying to work out when the recession is coming so that they don't overproduce and have to sell cheap copper. They're trying to wait until they've passed that recession so that they can push out copper when the prices are high and there's re-stimulation back in the economy. Now, the bigger part of today's analysis, Vernon, before I get into my major point of discussion, the bigger part of the analysis today is oil. Yesterday I released my expectation of the oil price, what it's supposed to think. This is my expectation. 1st of March, we should be expecting oil prices to be somewhere around 28 kwacha, 14 ngwe, mainly because we're expecting about a 92 ngwe. So obviously there's margins of error that we're allowed to experience in here. We're expecting about a 92 ngwe movement upwards in oil prices, 3.4%, mainly driven by the fact that the kwacha has lost 4.21% in value. We haven't really seen the oil price moving down. The average oil price throughout the month is 0.09%, only 9 basis points lower than the previous month. So really the key driver of all of this is the weakness of the currency. And you can see now why the central bank has to try and step in. But has what they've done worked? Let's take a quick look, Vernon, at what has been the impact since the 13th. I mean, the first week of it all. What has been the impact in terms of the central bank's movement of trying to get, if you can remember, the central bank did initiate on the 13th that they're trying to get. They increased the reserve ratio, and since the point of increasing the reserve ratio, we have seen the kwacha move up still. The dollar move up still by 1.3%. And if we look at maybe the week before that, so that we can try and get some of the data points to see how that's been. If we're looking at maybe the week before that, we saw that the currency moved up simultaneously also about 0.7%. So it's like it's almost gotten worse since they did the reserve ratio change. So the sentiment factors are overpowering any of the policy prescriptions. They've raised the interest rate. They've changed they've increased the reserve ratio, but yet the currency is still losing track at a bigger speed. This has no longer got to do, Vernon, with this has no longer got to do with the market anymore. It's got no longer got to do with fertilizer and fuel. I know we've got weakness coming into our copper mining sector, but this now has to do with sentiment. This is being driven by sentiment, and this is specifically because we have not sorted out our debt. Okay, I think everyone is now wondering because there is a gridlock. There are stories now coming out that there is a gridlock between China and America when it comes to Zambia and Sri Lanka's debt. So this is the two areas you have to try and watch out for. So I'll tell everyone to really watch out that right now we are expecting oil prices to go up by 92 ngwe. So here's what you need to do. If you're a driver, watch out for a few fuel shortages that will probably pitch up somewhere in the spectrum of this week or going into next week. You're going to find fuel shortages magically pitching up because companies will tell you, no, we're out of stock, we've run out. No, really what they're doing is just holding stock in the back, waiting for the hike to happen. So that is point number one that'll take place. Two, if you got your portfolio, you might want to look out for inflationary pressure because right now it looks like the transportation sector is now starting to react again to oil price hikes. So as a result, what you will find is that they are starting to raise costs on there. So any oil price hike will result in costs being raised. And three, you will probably start to see that if you are in business, this is probably a time to start trying to grab some inventory before inflation starts to pick back up. So you want to try and hold your stock in as much inventory as you can. Whenever you see inflation going up or starting to pick up, you need to start grabbing inventory and keeping your money in inventory so that you can try and you can benefit from either cost raises on the value of your products if you can afford to store as much inventory as possible. So inventory, your investments need to start being inflation proofed. And for everybody here, just watch out for fuel shortages that'll probably start pitching up because some of these OMCs or these petrol stations will start holding back stock because they bought that stock cheaper. When the price goes up, they make more of a profit margin on it. So that's just a simple game that they're playing. So if you want to start filling up now, I suggest you fill up now. That is the expectation you're probably going to see of prices going up over the next period. So that's my analytics when it comes to that. Now, the other part also when it comes to oil is because Russia is putting pressure on decreasing supply. That is the key thing. Russia is putting pressure on decreasing supply. And obviously, the Federal Reserve is expected to continue hiking rates all the way into June. So because of these two things, there's a little bit of a mix between oil, but the pressure is upwards. The price pressure for oil is upwards. Why I say this is that the Saudi Arabians and the UAE, their main goal is to see oil staying around $85. When oil is at $85, Saudi Aramco is a very profitable company. All these other oil companies and these sovereign wealth funds that they have do very well, and they get billions flowing into them in profits. And what do they do with those, Vernon? They come to countries like Zambia and say, we're going to invest $2 billion in your solar. They come to other countries and say, we're going to invest in this. They come to Africa and say, we want to invest in your mines. they're now able to use their capital to diversify away from oil and create a sovereign wealth fund similar to the way Norway has done it. They did it with their oil. They created a sovereign wealth fund that is now worth $1 trillion, and they have muscle around the world. So that is what the Saudis are trying to do. They're trying to create the Saudis and most of the Middle East are trying to do. They're trying to diversify their oil money and invest heavily, utilizing oil profits. But in order to do that, oil has to stay somewhere from 80 to 90, at least above 80. So that gives them a lot of leeway. So they're not going to allow it to drop below 80, because even they will step in and start dropping their output in order to push the prices back up. That is how OPEC has to work, people. That is just generally how they do it. They put their needs before the rest of the world. They're not a philanthropy. They're serving their countries. That's how they operate. So whether you like it or not, either that or you stop using oil. So the pressure on oil this is the bottom. It'll push it up. Okay, so expect the price to go up. And until we sort out the perceptions of our currency and the weaknesses around our currency, we will not see the oil price coming down anytime soon, or until we get the blending. Now, obviously, our Minister of Energy said we should be blending in the next 3 months, and also that the Tazama pipeline, which is supposed to bring in finished diesel, should also be bringing in. And those are 2 supply chain changes. And the only other long-term one is the Angola deal, waiting for the Sangol processing plant to start being active. That's only in 2026. So for these next 5 years, or not 5 years, the next 3 years, okay, this is a reality for most Zambians. In these next 3 years, oil will be a difficult thing. Whether you like it or not, that is a reality. For the next 3 years, oil will be a difficult thing. It is going to take supply chain restructuring, and it's going to take waiting for a new supplier from Angola. And then also it's not just even about that processing plant being done, it's also about the Lubito corridor to try and get the oil from there to Kolwezi, then trying to get the Kolwezi to Solwezi road worked on. So that's infrastructure that also has to be put in. So let's look at these things with realistic lenses to understand that inflation pressure may sit with us a little bit longer in the energy sector until we see a total collapse in the oil price. That's the only way we will see any change. Until we see a total collapse in the oil price, even the kwacha cannot strengthen beyond a certain point, because then it'll start to damage exports. That's the reality. Okay, and people will say, no, but my fuel price is more important than the export. Well, here's the reality. If Zambia is not exporting, you won't have money to buy fuel, because most of those exporters are where your jobs come from. Okay, so that's the reality as well. So you need to be able to export. So the balancing act always has to be that the FX rate cannot be too strong, because it deters export. We saw this in companies like Zambia Sugar. We saw this in companies like Lafarge Cement. We saw this in results like African Explosive. All 3 of these companies all cited stronger forex rates deterred their exports and dropped their revenue. Were those companies hiring, Vernon? No, they slow down in hiring if they start doing that. If they start experiencing smaller export markets, they slow down in hiring, and then you people go from complaining about inflation to complaining about joblessness. Okay? So really the balancing act is quite strong here. So that's what I was just trying to point out there for everyone. That, Vernon, is pretty much one of the major things I think we should all be looking out for this week in the markets. Obviously, inflation expectations are coming up. I'm expecting inflation to be higher than expected. It's still going to be strong because of the adjustments to transportation costs. I'm expecting that transportation costs and weakness of the currency are probably going to play into inflation, which we're probably getting the read tomorrow for this month's inflation print. And we're probably going to expect it to come in much higher than the usual standard 1% month on month for February. It's probably still going to sit somewhere around 2.8 with last month. I doubt it's going to come down. Now, I know year on year inflation will look lower because of base effects, but month on month inflation will come in higher, with the expectation that we'll see 11.1% increase in inflation costs. Now, Vernon, in today's conversation, my final thought for today, this is my market thought. I wanted to talk about the venture capital market and how to actually get people funding, and how to actually fix this funding gap that is happening in society, because higher inflation is going to lead to higher interest rates, still saying the same. Interest rates are going to stay the same. Now, here's a conversation that was had in Namibia by Vusi Tembekwayo regarding how to deal with venture capital and where is the most effective way to get venture capital. And he cites that countries and corporations, big corporations, are often your best source of venture capital. So here it is, Maestro. Conversation that Vusi Tembekwayo had in Namibia while he was there a few weeks back, talking about how to improve the venture capital cycle.
Actually, is that the most successful venture capitalists in history have been large corporates, not individuals like myself.
I see.
So and what large corporates do is they have tons of capital sitting in CSI or marketing or R&D that they would fund entrepreneurs who are building interesting things in their space and allow those entrepreneurs to scale. And typically they will acquire that business and make it a part of its service offering. So you're a telco and a young person is building a fintech app and you buy them so that they become part of your service offering. The history actually is that large corporates are the ones who should be driving it more. Now, sadly, and I'm a guest, so I want to be careful how I say this, I don't think that there's a strong culture of this in Namibia. I don't see that. And as a consequence of this, young Namibians starting businesses are expecting angels to walk out of the sky to come and fund them. That's not quite how that works, right? So the history is that large corporates typically play the first and best venture capitalist, and then after that, it's the government. They play the second and best form of venture capital because they've got tons of resources that they can plow into this. Now, to be clear, I'm not talking about money being plowed into programs. I'm not talking about, an awards evening where you're inviting a couple of entrepreneurs. That's not what I mean. I mean a structured, long-term investment program into a single or number of young people who are building something over a period of time that you can see a pathway to success. That's how that works. You and I today use the internet. The internet was invented and invested in by the US government, not a US individual, not a US company, the US government. Some of the technologies you're running on your phone are technologies that were invested in by the US government.
Yes.
Because the US government understands that they have to play that role. Over here, I've spent some time talking to different business people, and Alibaba is a company that came up an awful lot. I mean, think about how many companies the Chinese government has supported to be where they are today. So I suppose what it is I'm saying is that my experience here, limited albeit, has been that there's still massive upside for corporates in particular and government specifically.
Okay. Sorry about that. Yes. Now that was a conversation had by Vusi Tembekwayo where he was actually explaining how the history of venture capital actually comes into play. And if we're looking for funding to come, especially equity funding to come to the smaller parts of the economy and to the young entrepreneurs who are coming up with ideas, what you're going to see is that ideas often get bought out or they're done in conjunction or either bought out by existing corporations with research and development budget lines. Okay, so if you are a young guy coming up with an application, the most likely venture capital you probably find is if we incentivize R&D from big companies and they start utilizing R&D budgets to buy out or invest in companies. So let's say you're a kid who's creating a fintech and then a bank comes and invests in your fintech. You see, and they co-own part of it. Or if you are investing a new type of drink and one of the brewing companies says, we're buying out a stake in that. We want to buy a part of that. Maybe you've picked up some sort of headway. You've sold a bit and now you're able to get a venture. By the way, by the time you're getting venture capital, you already should have sales. You already should have some sort of customer base. There should be something here because venture capital is about expanding you beyond a specific point. It's not about starting your business. So that's one of the things he pointed out. He said, look, it's big corporations who are incentivized to do so. In America, they allow R&D development. They allow research and development to actually net off your taxable income. So you can actually pay it off because they're trying to incentivize companies like Amazon and those ones to continuously develop their industry and to come up with innovations that expand and change society. So what incentives, what R&D incentives have we given to our large corporations to invest in the economy and to make sure that we restrict the kind of R&D that they're doing? Maybe they can go into programs into universities and then offer certain grants because they need certain research done. The other part I think we should also look at, which he said there, had to do with government's role in venture capital. Now, we have things like the Citizens Economic Empowerment Fund, which unfortunately half the time is used for political purposes when it should be used to develop the young ideas of the country. And this is why, in terms of the president's team of his advisors, this is why people like Jito. You expect that that's the part they're spearheading the most, because he's actually got a background in Kukula Capital. And I know there's always been comments about Jito, and you can see it on social media half the time. There's always comments about him, whether he's competent or anything, and it often comes from people who have just never really done anything in that space, who don't really have a foot to stand on, whether it's college professors or armchair people who have never actually done anything in building a business or anything, and just have a coin to toss because we believe that it should be smart Alex with doctorate names behind their doctors behind their names standing next to the president. But the main thing I think, which I would expect from him, is that understanding how venture capital works from his perspective, and how to try and improve the efficacy of things like citizens' economic empowerment, so it can act more like a VC rather than just a handout fund. Because unfortunately, that's what it does. It does act a lot like a handout fund. And it's just this thing that people get excited on. It's almost like a lottery, even when they're going around marketing, it's just like a lottery where they're throwing money at people. And it's not about trying to transform the economy into developing businesses that actually create as many jobs as possible. And I hope that we can start to see something different from it and see it operating with a much better skill set. Now, how do you improve the efficacy of these things? Is that people have to understand that startups need a lot more than money. In fact, money is the final thing a startup needs. The startups in Zambia need a lot of training in how to develop their businesses, how to structure their businesses, how to develop products. In fact, product development is a real problem in this country. People don't know how to develop products. They just know how to see whether they can make money quickly and they run for it, but they don't know how to develop products in the economy. So that, I think, is where there's a lot more training. There's a lot more knowledge-based things, and there's a lot more connecting people with pipelines that could even be better. There's a lot more that can be done before we start pushing the agenda of just pushing money at people. Because one of the reasons citizens' economic empowerment and many of these government programs that are aimed at trying to stimulate business activity have often failed, Vernon. One of the main reasons they fail is because they hand money to people who are not ready to receive it. That is the truth. And people just think that, no, but it's my turn. There's an it's my turn mentality. So because money gets dished out to people who are not able to receive it, and therefore are not able to pay it back, as a result, these programs have got horrible repayment rates. Like, you start hearing only 27% of loans are performing. The rest of them are non-performing. If that was a bank, it would be shut down by the central bank. That's how bad those programs are, because they do not focus. When you go to areas like Silicon Valley, sorry, just quickly rush it. When you go to areas like Silicon Valley, you often find that when venture capital goes somewhere, they often are incubators and accelerators that build these businesses. Incubators help them get started. Accelerators help them pick up pace. And by the time venture capital has come, this business has been flushed out. It has picked up its market. It knows its products. It knows what it's selling. It knows how to grow. And already venture capital is there to pick it up and boost it to the next level. That is what we need. We need a lot more of government funding programs, that 400 million kwacha or whatever, going towards backing graduates of accelerators. If you can have things that come out of clinics and accelerators, those are the ones being funded, most likely you'll find that our venture capital system, our ecosystem might improve, especially with government backing. But if you stick it just to a bunch of bureaucrats, and I'm sorry to say this, Vernon, the people who are handing out money have never run businesses in their lives, okay? So if you're handing the decision to select a good business to somebody who has never run a business in their life, they've never built one, nothing. If you're handing that decision to them, they're going to make the decision on political purposes and say, who are the most vulnerable people? Who are the people who need it the most? Not the people who can use it the best. And as a result, capital will not be used properly. So that is what I mean when I say I'd add on to what he's saying. And I'll leave it there for today, brother. I'll leave it there for today.
Thank you so much, Mtwaya, for your time. It's been a pleasure to be once again. Thank you.
Cheers.